Quick question for you, Io. What even is a credit score? And do you really need to care about it if you're not rich? A lot of people think that's a problem for people buying mansions or fancy cars. But here's the truth. Your credit score can affect where you live, what you drive, what you pay for insurance, and even whether you get a job. And if it's bad, it can cost you thousands of dollars you didn't need to spend. Here's the kicker. You don't need a six-figure salary to have a great score. You just need the right habits, and today I'm going to give them to you. By the end of this video, you'll know exactly what a credit score is, why it matters more than you think, how to boost it fast, and how to protect it for life. So grab a coffee, sit back, and let's talk about how this little three-digit number can shape your financial future. Chapter 1. Credit Score 101. Let's start at the very beginning. What is a credit score? Think of it like a financial report card. Instead of A to F grades, you get a number from 300 to 850. That number tells banks, landlords, and sometimes even employers, if I lend this person money or trust them with a contract, will I regret it? Here's a real-life example. Rachel is a freelance designer. She's amazing at her work, always pays her rent in cash, and never thought about credit scores. One day, she applies for her dream apartment. Beautiful place, great location, fair rent. But her application? Denied. Why? Low credit score. She'd never missed a rent payment, but she had a forgotten credit card bill from years ago that trashed her score. She didn't even know it was on her record. That's how powerful this number is. It's invisible until suddenly, it's not. Here's the score breakdown. 300, 579 equals poor. You'll struggle to get approved. 580, 669 equals fair. You might get credit, but at higher costs. 670, 739 equals good. You're on solid ground. 740, 799 equals very good. You're trusted. 800, 850 equals excellent. The VIP lounge of credit scores. A good score says, this person keeps promises. A bad score says, this person might be trouble. Chapter 2. The 5 ingredients of your score. Your credit score isn't random. It's built from 5 factors. 1. Payment history, 35%. This is the most important piece. Do you pay your bills on time? Even one late payment can stay on your report for 7 years. Tip: set up autopay for every bill. One missed payment, especially by 30 days or more, can drop your score by 50 to 100 points instantly. 2. Credit utilization, 30%. This is the percentage of your available credit you're using. Example: your limit is $1,000 and you're using $900. 90% utilization equals bad news. Try to keep it under 30%. Under 10% is ideal. 3. Length of credit history, 15%. The longer your accounts have been open, the better. That's why closing an old credit card can sometimes hurt your score. 4. Mix of credit, 10%. Lenders like to see you can handle different types of credit, like a credit card, car loan, and maybe a small personal loan. 5. New credit, 10%. Every time you apply for new credit, it triggers a hard pull, which can ding your score a bit. Too many applications in a short time looks risky. Story time. Mike, fresh out of college, thought paying his phone bill on time was enough. But he forgot about his student credit card. Missed payments tanked his score. After setting up autopay and paying balances down, his score climbed over 80 points in 6 months. Chapter 3. Why your score really matters. Your score can decide loans and AMP, mortgages. Higher score equals lower interest. That's real money saved. Renting. Landlords often check it. Utilities and AMP, phones, low score. You might pay huge deposits. Insurance premiums. In some states, poor credit means higher rates. Jobs. Some employers check credit for roles involving money or trust. Example: Sarah, an accountant, always paid cash. But when she needed a car loan, her Her thin credit file meant crazy high interest or a co-signer. Her good salary didn't matter. Her score did. Chapter 4. Credit Score. Myths. Let's bust some myths. Myth No. 1. Checking your own score hurts it. Nope. Only hard pulls from lenders affect it. Myth number 2. Carrying a balance builds credit. Wrong. You build credit by using it and paying in full. Carrying a balance just means paying interest. Myth number 3. Income affects your score. Your paycheck size isn't part of the formula. Myth number 4. You can fix your score instantly. Sorry. Improvement takes consistent habits over months. Chapter 5. Habits for a high score. Pay every bill on time. Keep credit usage low. Don't close old accounts unless necessary. Only apply when needed. Check your credit report regularly for mistakes or fraud. Quick win tip. If your utilization is high, ask your credit card company for a limit increase. This instantly lowers your percentage. Just don't use that extra limit to spend more. Chapter 6. Fixing a low score. You can recover from a bad score faster than you think. Bring accounts current. Pay down balances aggressively. Avoid applying for new credit too often. Consider a secured credit card. Dispute errors in your report. Neil, who maxed out his cards in his 20s, got a secured card, paid it early, and stopped applying for new accounts. His score jumped to 140 points in a year. Chapter 7. How good credit saves you money. Let's run the numbers. Car loan, $20,000 at 12%, fair score, that was over $4,000 in interest. Good score, 5% interest equals $300 in interest. Excellent score, 3% interest was under $700. The difference, thousands in your pocket. Same for mortgages. Over 30 years, a bad score can cost you tens of thousands extra. Chapter 8. Quick Action Plan. Check your credit report at annualcreditreport.com. Set up autopay for every bill. Pay down balances below 30% utilization. Tackle small debts first for quick wins. Avoid unnecessary applications. Chapter 9. Final words. Your credit score isn't about being rich, it's about having choices. It can mean the difference between getting approved or denied, paying thousands or saving thousands. And the habits that build it? They're simple. So, what's your credit story? Which of these tips will you try first? Drop it in the comments. I'd love to hear from you. And if you found this helpful, hit subscribe, share it, and stick around. Next time, we're talking about building wealth from scratch. Thanks for watching, and remember, your future self will thank you for starting now.